Hey guys, Don Durrett, Gold Stock Data, uh, video of the week. Uh, last week, you guys didn't get a video. Sorry about that. I was busy. Um, but I did give you a print, monthly recap, so you didn't get completely shut out. So I decided that I worked to the bottom, and after I finished these, I decided to add videos to all the ones that have links. I think that's the easiest way. I'll just start working my way down. So today we're going to do Avino and Aya. So let's go ahead and just start. So the first one is going to be Avino. Avino has been one of the better plays the last year or two. It got incredibly oversold down to under 45 cents. It it really at that level, I thought anybody that wasn't buying it sub 50 cents really wasn't paying attention because it had an unbelievable setup, and still it's about a nine bagger off the bottom, and still has 10 bagger upside, which is kind of amazing. That would be a 100 bagger off the bottom if it does go to $42. And I think it's going to. I think I have an exit price of $50 on this one. Let's go check my exit price. Edit subscriptions, price alerts, Avino. Yeah, I have a $50 exit on Avino, which would be a 100 bagger off the bottom. Pretty amazing. Um, Here's their production profile. They probably won't get this year, they're around 2.5, 2.8. They probably won't get to 4 million in 26, but probably 3.5 to 3.8. They're targeting 3.8 right now. Little bit of growth in 27, and then it jumps in 28. Um, and these 27, 28, 29, those could all be exceeded, but we're looking about 3.8 and 26. So if we look at some of these valuations, this is when I did last time I looked at this, it was trading at 240. Now it's up to 420. If we look at a free cash flow in 28, um, that's at 6 million. I think they're gonna do better than that. It's showing $8 billion market cap at $100 silver, and they're currently, that's they're 672 million. That's basically 10 bagger. These say 1923, but that was the last time this was done back in May of last year, so they've ran quite a bit. But still, I'm showing them as a 13 bagger, as an 8 million ounce producer, and I think they will get to eight, but we're gonna have to wait a few years for them to get to eight. Currently printing about a nine multiple, 76 million free cash flow run rate. It's still fairly cheap. Um, it's the reason this stock is so attractive. They have fairly closely held, 157 fully diluted, good balance sheet, 54 million in cash, no debt, generating 50 million plus a year. So their balance sheet's getting better. Currently have $20 margins. ASIC around, I think it's around 20. Um, so $20 margins on 3.8 is not bad. But the story here is their growth. They have 365 million ounces silver equivalent, and they're only mining 2.8. They could easily get to 10, maybe even 12, but right now they're targeting 8. I'm targeting 8, but I think this 8 can be exceeded. Um, so if we look at the share price forecast tool, I don't think they're going to dilute more than this one. They'll probably do some buybacks. I have them at 18 multiple. I think if silver goes to 100, I think they will get that 18 multiple. So 32, currently about a 20. Their costs are going to come down. La Preciosa has a good grades. The cost will come down. Um, we bump this up to, I'll go ahead and run it here. And this is showing what's currently the 13. Now, if we bump this up to 125 silver, which I think is a legitimate number, and we take their costs up to 35, we're going to bump to about 15 bagger, 18 bagger, which is substantial, right? My exit price is $50 and it's showing as an $82 target at 125. So I'll be leaving a lot on the table. But this is the kind of leverage this stock has. And this is 18. And if things get crazy, I mean, if we go up to $125 silver, there's always a possibility that this multiple blows out. Currently at a 9 multiple, is that this is going to rip higher once we get some higher silver prices go higher. You get to $75 silver. There's no way this doesn't get to 15. Um, so this 18 is actually, fairly conservative. I don't think they're going to dilute. They might even buy back some shares. Um, they really don't. They have enough free cash flow to grow organically. They do have a CapEx. They actually don't have any debt. I don't think they have any debt. If they have very little, they have a little bit of CapEx for the tailings project, but I think they can. I don't think they're going to need to dilute. Um, so from a upside standpoint, from a leverage standpoint, Avino, even though it's a 9 bagger, it still prints incredibly, incredibly well. I think Wall Street is really ignoring the potential of Vivino. Yeah, it's ran, but it's still very cheap. It should be. I still think it's when I look at the upside potential of this company, I think it's kind of a must own stock. So here we have 26. Here's your 3.8 that I was talking about. And now here's a little over 4 and 27. And then it rips. And this is the tailings project, I believe. Yeah, this is the tailings. That's going to kick in 28. And then La Preciosa is going to grow. And then right here in 29, I think this is La Preciosa is going to get bigger. I think we're going to get above 8 in 29. We might get to 8 in 28. We're going to see some significant growth here. Most of this is all organic growth. It's all permitted. Well, actually, the tailings has to be permitted, but I don't think that's going to be an issue here. I don't think they can speed up the tailings for 27 because of the permitting. Um, Silver and gold. This is actually very impressive. In 26, we only have 17% copper. 27 goes to 15%. So in 27, they're basically a pure precious metals miner. Very impressive. Um, You're at an ASIC at 24 in Q3. So my costs are a little low. It's about $32 break even. That cost will come down a little bit. Wow. Okay, they're currently, this is too high. 24, 18. Cost will come down. 14. The cost will come down a little bit. So it's at 30. That might be a little bit. Wait and see. 13, 15. Might be a little too aggressive. 19. Now it's showing 64 and 10 and still showing a 13 bagger. 500 million free cash flow. Cash cost 18, all in 24. So it went up a little bit, but I think it's going to revert back. Integrating AI. They've been doing a lot of drilling at La Preciosa. Here's the 19 kilometers, but I don't think that road is straight. I don't know if they're able to build a road to go across this or not. Paved road, but they're not showing us where the paved road is. I don't know if they've created a 19-kilometer. Um, David Wolfen said that if they could get an open pit permit, they could increase the production dramatically. But my understanding was that one of the reasons why Coeur sold it is because they were having trouble permitting the open pit. But that's something to keep an eye on, see if they start talking about it. But I think there was some local resistance for an open pit there. Um, they are definitely having success with the drill bit here, and they're drilling aggressively. Ramping up right now at La Preciosa, and then this is just going to be steady growth. I think this is the tailings, 49 million capex. Yeah, the tailings has a 49 million capex, which is significant, but it's going to have a fast payback. Possibility of dilution for that 50 million, that's for sure. But they're currently sitting on 50 million cash, and they're generating about 15 million in cash per quarter. So they can definitely borrow some of it. I don't think they'll dilute. We got 157, 166. So we just got some dilution. Took it down to a 12 bagger, which I'm okay with 10 baggers. I think that's all we have for Avino. I don't think there's much more to say on it. Um, and currently a 700 million market cap, and I'm showing 500 million in free cash flow. 1.3 future after they grow production. Once this thing gets to 6 million ounces, um, this thing's going to rip higher. The multiple is going to get a lot higher. I think it's going to, I'm buying it at 15. I think that's too low. I think we could take that thing easily to an 18. Matter of fact, I think I'm going to do that right now. Oh, I have it as an 18. That's good. Okay. 18 makes sense. Um, but you can see Aveeno definitely belongs um, on the portfolio. I don't really see any red flags. The local community support it. Seems like one of the better plays, if you will, as far as risk reward goes. Okay, so the next one is Aya. Now, Aya has Boumediene, and I'm very excited. Aya just came out with their PEA, so it's good timing to take a look at Aya after the PEA came out. Both of these stocks are in on my top 25. So Zagander just ramped up to, I think they're currently at 6 million ounce run rate. I think I don't have them growing. So I'm not showing any growth as Zagander, which is very conservative. And I'm showing Aya at 400,000 ounces, but this is going to take a while. We're looking like 2030 for that. We're looking 5 years out, 4 years out. So it's going to take a while for Zagander. And I think this 400,000 ounces is conservative. I think they're gonna do better than that. So $10 share price, 50% insiders. So they're not for sale, I don't believe. Tightly held, 152 fully diluted. Good balance sheet, 120 cash, 100 debt. Current multiple is pretty good, $22. Um, about an 18 ASIC, I think. 26, about 18. Go down and look at the upside. Currently at 11 multiple, about the same as Avino, 132 free cash flow. They print higher than Avino, but you got to wait for it. 17 bagger, but it's going to take a while to get Boumediene. Before we look at the company presentation, let's take a look at the tool. So also I'm using an 18. I don't know if they're going to be able to do Boumediene organically or not. Um, they're going to be generating a lot of cash flow between now and the build, so it's a possibility. We have 400,000 ounces, so we could take this up to 600, 6,000. We could take this to 125. 2,000, that might be a little much. Take this to say 2,500, which is good, conservative, and this to say 34. And take a look at it. So Prince is a 20 bagger. If you take the $6,000 gold, 125 with an 18, that's with no dilution. So Aya actually has more upside than Avino, but we got to wait till 2030. It's going to take a while. Whereas Avino, I think 28. But this is with 400,000 ounces of production and 6 million, which I think these are very conservative numbers. Let's go take a look at Aya's presentation. They should have the PEA. November 5th, so this should have the PEA in it. Should. I'm not sure. I is a pure Zagaunders is a pure silver play. Um, and Boumediene is polymetallic. I think there's more revenue in gold. That's why it's showing. So there's 153, 142, 153, 142. I'm showing 157, 166. Mhm. I like Morocco. I don't think Morocco is a high risk country. So they haven't had any problems. I'm anticipating that continues. It's supposed to be a really good place to get permits. Tax rate's 32%, royalty 3, so it's not a high tax country. So you can see the size of Boumediene. It's very large, 450 million ounces, and they have like 100,000 meters of drilling that's not part of that. It's going to be added. So it's getting bigger. So they're ramping up production and up to a million. That would be four, but the ramp up keeps improving. So I think I have them at 5 million right now. I think they're going to get to six. So Zagauner's 100 million ounces, 102, and they're finding more. I think it's going to get to 150. So I'm valuing them at six, and this has them going seven. So I'm a little low. This doesn't look right because they're currently not even at five. And this is showing 25 at seven, which doesn't make sense because the last quarter, last quarter they did 1 million ounces. Oh, this is recovery rates. I still don't think they're producing 7 million ounces. Are they at eight? I only have them at six. No, they are. 1.4 is 2856. They're 1.4, which is 56 run rate. And here's their guidance, 5 million ounces. This presentation doesn't have the PEA, but I know, oh, here we go. Yes, they do. It's the next slide. So you can see it's very economic. 2-year payback, $400 million capex. They're probably going to have to dilute that. I don't think they're going to there's no way they'll be able to raise that much money. Um, So my 17 bagger doesn't have enough dilution in it. Um, so they're only going to do 300,000 the first year, but I think this is the PEA. I think the DFS, I think is going to grow in size. We might not get to four um, by the time I think there's a very good chance they could get to four. They have a few years before they do that DFS, and they're finding more. Um, so we have AU. So the biggest chunk of this is AU, and then silver, but it's mainly gold and silver, which is nice. And then we have zinc, and there's very little lead on the top, PB. You can see this little here at the top, that's the lead. But it's mainly gold and silver. Like, look at this. I mean, it's all gold and silver. So at $4,000 gold, I like that they're using this $4,000 gold. They have a $3 billion MPV, which that's worth more than the company today. They're showing free cash flow at 3.8 total. This seems to be misleading. It says Boumediene is fully permitted. I don't think it is. Um, Something to need to dig into that one because if it was permitted, I would think they would get it into production faster than they're showing. These are all these areas that they're going to drill. It's a very large property, 34, 60, 80, 80,000. Exploration authorization is 60, 120, 30, 150,000 acres. One mining license, basis for the current PEA, one mining license. This is interesting. Maybe that's what they mean by permitted. If it was fully permitted, I think they would list it here. And they'd probably list it here. Okay, we did a capital raise. Got positive. Okay, so off-take agreements, 114 in cash. I think they're down to 57 though. You see the grade in the gold is very, very good, over 2 grams. That's very high grade for a pit. And I got 14 million tons at 2.8. Very economic. So they're going to focus on open pit, 6 pits. It's easy to mine. The grade's excellent. It's going to generate a lot of free cash flow. We're looking at ASICs here of around $1,000, probably less. Um, so the ASICs down here, it's at $900, $1,000 life of mine. The first 5 years, we're looking at $900. AUEQ. So that's very low. So in production, maybe 1100, 1200, which will be very low. They say they include inflation, but I've found that they really don't do a very good job of it. So low cost mine, a lot of free cash flow. I think it's going to grow too. I think I said that, but they're starting out at 300,000. I think they're going to exceed it. Here we go. So construction, yeah, maybe it is permitted. I mean, they don't have permitting on here, which is fantastic. Usually you got to include permitting, right? Here we have the ESA. Maybe this feed, maybe that's commissioning. Feasibility study in 26, feasibility study 26, 27. So we got a lot of drilling, update drilling 26, 27, 28. So they're going to drill all the way until the end of 28. They really won't have an opportunity to update the feasibility study. So maybe they won't be able to expand that production much. Here, they're going to have a little bit of drilling in 20. They're going to have the 26 drilling. So next year, if that grows to, they're at 450 million ounces. Let's say they get it to 550, maybe they increase it to 350,000 ounces a year to start. I don't know what this feed means. Um, so 28, 29 construction. And so I don't think they're going to be able to speed this up any faster than this. But it's about a 2-year build. It's a big mine, so it could take off in value um, late 27, early 28. It could take off as people start to recognize here comes the free cash flow. So they're working on different ways to get higher recovery rates. Here's the drilling. Um, I know it's open and open in all directions, and they're finding more. It's a big property too. It's amazing that they've been able to drill this much of it. They're going to drill all of 26. Um, working. Well, so Boumediene, Boumediene. Okay, guys, I think I'll leave it there. It was a bit of a long video. See you guys next week.